artificial intelligence stocks continue to dominate investor discussions because of massive investments being made by the largest technology firms and cloud infrastructure companies. These businesses, often called hyperscalers, have been pouring billions of dollars into artificial intelligence to gain an advantage in data processing, automation, and software development. However, while this rapid growth has created incredible opportunities, it has also led to growing worries about overvaluation. Not every company that is tied to artificial intelligence has been able to fully benefit from this surge in demand. As a result, some of these companies now have very high stock prices that may be difficult to justify unless they can maintain strong and consistent growth. To get a clearer picture of how leading artificial intelligence companies are performing, analysts at TipRanks used their stock comparison tool to evaluate two major players in the space, Palantir Technologies and Nvidia. These two firms have become central to the artificial intelligence story, yet they serve different parts of the market. Palantir focuses on advanced data analytics and enterprise solutions powered by artificial intelligence, while Nvidia dominates the hardware side by producing the graphics processing units that power artificial intelligence models. The goal is to determine which of these two stocks might offer investors better potential according to Wall Street analysts. Palantir Technology stock has seen an extraordinary rise of 144% since the beginning of the year. This sharp rally has been driven by strong performance in both revenue and profit. The company's success comes from its ability to apply artificial intelligence to massive data sets in ways that provide meaningful insights for clients. Initially, Palantir gained recognition and secured most of its revenue from government contracts. However, in the past few years, the company has rapidly expanded into the private sector, establishing a stronger commercial presence across industries such as healthcare, manufacturing, and finance. This expansion has made Palantir one of the most watched artificial intelligence companies in the market today. In the second quarter of 2025, Palantir's United States commercial business achieved a remarkable 93% revenue increase, which exceeded the 68% growth seen in its government segment. This result highlights the company's ability to diversify beyond public sector work and shows that its artificial intelligence tools are finding widespread adoption among corporate clients. Another significant milestone for Palantir during the same quarter was that it reached the $1 billion revenue mark for the first time. This accomplishment underscores how quickly its business model is scaling. Investors are now eagerly awaiting Palantir's upcoming Q3 earnings report, scheduled for release on November 3rd. Analysts expect the company to post a 70% year-over-year increase in earnings per share to 17 cents, with total revenue climbing 50% to approximately $1 billion and $90 million. The company continues to strengthen its leadership in artificial intelligence through major partnerships and strategic collaborations. Recently, Palantir announced a major deal with Snowflake. This partnership brings together Snowflake's artificial intelligence data cloud with Palantir Foundry and Palantir Artificial Intelligence Platform. The combined system is designed to help customers create faster and more efficient data pipelines, perform analytics in real time, and develop artificial intelligence-driven applications with greater ease. Shortly after this announcement, Palantir stock climbed about 3%, reflecting positive investor sentiment. In addition to that partnership, Palantir revealed that it signed a multi-year, multi-million-dollar agreement with a major enterprise customer. The goal of this collaboration is to help businesses deploy artificial intelligence tools more securely across multi-cloud systems, which is an increasingly important capability for large corporations. Piper Sandler analyst Clark Jeffries recently maintained his buy rating on Palantir stock while raising the price target from $182 to $201. Jeffries expressed confidence in the company's strong fundamentals, but also warned that its elevated valuation leaves very little margin for error. In his view, even minor signs of slower growth could cause the stock to face short-term pressure. Nevertheless, Jeffries remains optimistic about Palantir's long-term outlook. He pointed out that Palantir has not yet reached its full growth potential. The company currently has over $7 billion in defined contract value and an additional estimated $4 billion in indefinite delivery and indefinite quantity contract value. This provides strong visibility into future revenue streams. On top of that, Palantir's commercial bookings have been accelerating at triple-digit rates this year, signaling that new business opportunities continue to flow in at a rapid pace. Jeffries also emphasized that Palantir has a huge opportunity opportunity within the United States defense sector, which represents nearly $1 trillion in potential spending. Even with all of these positive factors, Wall Street remains somewhat divided on Palantir. While some analysts continue to praise the company's innovation and rapid expansion, others are more cautious due to its high valuation. Overall, Palantir holds a hold rating consensus among Wall Street analysts. This rating is based on 4 buy ratings, 13 hold ratings, and 2 sell ratings. The average price target for the stock is $157.65, suggesting a potential downside of about 14.6% compared to current trading levels. Now shifting the focus to Nvidia, the chipmaker that has become nearly synonymous with artificial intelligence. Nvidia's role in the artificial intelligence revolution cannot be overstated. Its graphics processing units are the backbone of artificial intelligence model training, development, and deployment. These powerful processors are used by major technology firms to create systems capable of understanding language, analyzing images, and performing complex computational tasks. Nvidia's stock has continued to surge, driven by overwhelming demand for its artificial intelligence hardware. Although the company faces growing competition from advanced micro devices artificial intelligence chips and Broadcom's custom artificial intelligence accelerators, it continues to maintain a commanding lead. Most analysts remain confident that Nvidia will continue to dominate because of its powerful combination of cutting-edge hardware, proprietary software, and a large network of developers using its CUDA platform. Furthermore, Nvidia's success is supported by strong management, visionary leadership, and partnerships with other leading technology firms. The company recently secured a $5 billion partnership with Intel and a $100 billion investment in OpenAI. Nvidia's growing involvement in sovereign artificial intelligence initiatives also adds new revenue streams as governments around the world look to develop independent artificial intelligence infrastructure. Beyond artificial intelligence data centers, Nvidia is exploring opportunities in emerging industries such as autonomous vehicles. The company has been working with Uber Technologies to accelerate the development of self-driving cars. This effort highlights how Nvidia's expertise in artificial intelligence extends far beyond chips and into real-world applications that could shape the future of transportation. Earlier this month, Piper Sandler analyst Harsh Kumar reaffirmed his buy rating on Nvidia and maintained a $225 price target after speaking with the company's management team. Kumar noted that Nvidia's current business environment remains extremely strong, with demand for its products far exceeding available supply. This demand-supply imbalance underscores Nvidia's unmatched position in the artificial intelligence market. Kumar also pointed out that Nvidia's financial support for partners such as OpenAI and CoreWeave is not affected by concerns over circular financing. However, he did mention that Nvidia's business in China continues to face challenges due to trade restrictions and government regulations. While this situation limits some short-term growth, certain export licenses have been approved, allowing Nvidia to maintain limited operations in the region. Importantly, Nvidia's Q3 guidance did not include revenue from its upcoming H20 chips, which could serve as a potential upside once production begins. Currently, Nvidia has a strong buy rating from analysts based on 35 buy ratings, 1 hold, and 1 sell recommendation. The average price target of $225 indicates an upside potential of roughly 21% from current levels. The company's stock has already increased by approximately 39% since the beginning of the year, showing continued investor confidence in its future growth. When comparing both companies side by side, it becomes clear that Palantir and Nvidia are leaders in different but complementary areas of artificial intelligence. Palantir's strength lies in its ability to turn complex data into actionable intelligence, making it indispensable for both government and commercial clients. Nvidia, on the other hand, provides the critical hardware and infrastructure that power artificial intelligence systems worldwide. Both have benefited from the artificial intelligence boom, but their risk profiles and growth potentials differ. Wall Street remains cautious about Palantir because of its steep valuation following a huge rally. Many analysts are waiting to see whether the company can sustain its growth momentum before justifying such a high price. Nvidia, however, is viewed more favorably due to its established dominance, strong demand, and large-scale manufacturing capabilities. Even though competition in the artificial intelligence chip market is intensifying, analysts still see Nvidia as a company with long-term growth potential that could continue for years. In summary, both Palantir and Nvidia are key players shaping the future of artificial intelligence. Palantir stands out for its data-driven approach and expanding commercial presence, while Nvidia remains unmatched in the hardware segment that powers artificial intelligence innovation. Investors must weigh valuation risks against long-term opportunities when deciding which of these two stocks aligns best with their goals. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.